Good morning and welcome. Patriot Radio News Hour. Joe and Jason on this Thursday. I hope it finds you well out there. I guess, be glad you're not anywhere near the fires raging all over Los Angeles and the surrounding areas. It's just totally devastating, and it's going to have a big impact, unfortunately, all over the United States and what things are going to cost. Be prepared out there. This is also the day that we are honoring Jimmy Carter. He passed away, as most of you know, earlier. Was it either at the end of last year or the beginning of this year? But today the markets are closed in honor of President Carter and the half flags at half mast and all that other stuff. So a quiet day, but not a quiet day. The one thing that couldn't close, and think about this, Wall Street is closed. So the stock market, the Dow, the S&P, the NASDAQ. You know what had to open today? The bond market. Yeah. They didn't have a choice. Why? The debt's got to be sold, baby. And speaking of debt, we have a big update, another worrisome thing in the debt markets, and this is all over the place. Please take this serious. I know that, hopefully with Donald Trump and Elon Musk and Vivek and all, things are going to happen. Things that I want. Get it. This has nothing to do with that. It doesn't. Be very smart here. Get diversified. Adding to gold and silver right now is just a fantastic opportunity. Yesterday, we sold gold eagles and maple leaves and $20 gold pieces below spot yesterday. They're all gone. But guess what? We always have great opportunities out there. Our toll-free number, 800-951-0592. The website at allamericangold.com. Tomorrow we'll get the jobs number. Anything low will be they'll be happy about, right? It's kind of so weird. Wait a minute. Don't we want people to have jobs? And the answer right now is no. They want a low number. Wall Street will like it, obviously. Gold and silver will like it. Everybody will like it. A higher number, that may be very, very bad. I have no idea. These numbers are so crazy that who knows? How are we supposed to make decisions based on the idiocracy of all the numbers that are coming out of our government and coming out of the Federal Reserve? Let's just focus really fast, just for a minute. And we're going to really dive into this on the half-empty cup. But they've been talking about climate change for how long now? Couple of decades at least, right? You hear on the idiot box, whether it was the hurricane that ripped through Florida and the Carolinas, to this fire now raging in California. Oh, it's climate change. The one thing that I think we want our government to do is to prepare for this stuff. It's not like this was news to them, right? They've been saying this, so you would think that they'd be like, hey, you know what? We got to spend more money on cutting the grass, right? Thinning the forest, right? We got to spend more money on these types of things. We got to give fire more money. Instead, what have the governments been doing? Giving it less. right? California, they stripped out millions of dollars. And it's funny, not just the state, the mayors, right? They got to try to balance budgets. And what do they do? Well, let's get rid of millions of dollars in fire. A month ago, the fire chiefs or whatever they were wrote a letter to the mayor of Los Angeles and said, hey, all that money you didn't give us? We're not going to be able to fight fires very well. So you may want to try to find somewhere else to go. And on top of that, California gave a bunch of fire equipment to Ukraine. There's a guy, we've got plenty of fire stuff. Here you go. Right? And this is what I'm saying. Government needed to focus on the things they needed to focus on. Instead, right, they're trying to worry about, LBGQ, DEI, and all this other nonsense. They're supposed to, govern to protect the people. Don't sit there. I'm almost tired of it now, Jason, where, it's climate change's fault. No, it's not. It's the fault of the government to prepare for what they told us they knew was coming. He's speechless. Jason is speechless.
I don't know. I was thinking. I was like, well, I don't really like asking the government for any help. So I was debating in my head. It's like, well, when it comes to fire, I don't know whose fault is fire. I guess really, I don't know, Joe. I'd rather just take care of my own fires than leave the government out of it.
800-951-0592, Joe and Jason, Patriot Radio News Hour, allamericangold.com on this Thursday. Again, Wall Street is closed. The bond market had to open so the U.S. could sell its debt. But the bigger news today in the bond market coming out of the U.K., very big concerns about liquidity in this market, and it's coming. I don't know which country it's going to be first, but it's coming. We are going to have failed auctions. We're going to have most of the central banks around the world having to be forced back into quantitative easing. But interest rates aren't going to be zero. Yeah. This makes no economic sense. But hey, we stopped making economic sense a long time ago. Why do we have boom and bust cycles? Have you ever asked yourself, have you ever thought about it? Why? Well, the answer is really simple. See, the central bank and how they got into power, one of the things they said was, well, gosh, we can make the bad times not so bad if you just let us print a little bit of money. Now, we got to pay it back during the good times, okay? But this is what we need to do. So, boy, that sounded really good. Right? It sounded good. We're like, wait, really? Yeah? Huh. That makes kind of sense, right? Well, what was wrong during the Great Depression? Well, the bankers were mad. This gosh darn gold? We got to get it out of the ground before we can make more money. That's inconvenient. Yeah, if we could just print a lot of money, we could fix this problem. And they got everyone, okay, sounds good to us. Because you got to remember, they loaded the Congress with banker friends. They got smart. They figured it out. This is not our first central bank. A lot of people, so many people really don't know history. And it's so frustrating. This is the third attempt The first two ended in spectacular fashion. We said, hey, we'll try it for 20 years. Oh, wait, you guys are liars. This sucks. Let's go without it. We became a superpower without the central bank. But the bankers were smart. Got the right people elected. Sold us this story. Took the gold away from the citizenry. Heck, even after that, though, they were limited. How were they limited? Well, they were limited because foreign governments could still trade treasury notes for gold. So they really had to kind of be honest. Now, World War II, we get it. We ran up some debts. Not a lot. By the way, not a lot. I think at the end of World War II, the debt was like $250 billion. By 1971, it had grown to $400 billion. Now, what people don't know, though, is half of the years between 1948 to 1971, we ran budget surpluses. The other half, we ran budget deficits, right? Everyone gets that. I mean, it obviously wasn't perfect. We were still adding a little bit of debt, but nothing outrageous. Now, of course, all the central banks wanted their gold, and we were running out. And then, of course, we know they closed the gold window. What has happened since? What's happened since? Be smart now. Don't be a dummy. Pull your head out of your backside and pay attention. How many budget surpluses has the United States run in the last 35, what is it? Wait, am I doing bad math? 55 years. Well, 54. In the last, but let's, screw it. Let's go 55. In the last 55 years, how many? They say 2. Now, I could be kind and give them the 2. So that would be what, 53 to 2? Right? I don't care. Pick this board. That's an ass whooping. 53 to 2. Right? That's called fire the coach type of a record. Right? Fire the bankers. Now, the problem is the 2 was a fake 2. We didn't really run a budget surplus during those 2 years of Clinton. Why do I call it a fake surplus? Well, they spend the excess Social Security money. So those 2 years, if they actually had not spent our Social Security, because remember, up until, I don't know, maybe 10 years ago, give or take, we were collecting more than we needed. And the 90s was the biggest part. Because none of the boomers had barely started retiring. We were collecting big dollars extra in Social Security. So that's how you got the 2. So we really have none, 0. It's a shutout. And guess what? Now they tell us, well, it's okay if it's only this amount, right? It's okay as long as it's only 3% of GDP, a yearly deficit. Well, now we're at 8. Still not okay. Well, we only want 2% inflation. Well, it's 4. Well, I guess they say 3. Oh, it's 3. Well, it's Donald Trump's fault now. This morning, and really it started yesterday, in England, and we've been talking about all of these governments, right? How many times have we talked about these governments? Oh, well, let's get rid of the leader. Trudeau's gone. I forget who was in charge in England. He's gone, right? France, you're gone. Germany, South Korea. And they're trying to say, oh, look, it's the Donald Trump wave, right? It's the Donald Trump wave. They're getting rid of the lefties. That's a good story. And guess what? They will definitely try to pick somebody closer to the stuff that Trump has been talking about, no doubt. But that's not what's really happening. What's really happening is we're out of money. Do you know that yesterday's 10-year auction, well, maybe in 2 days ago, yesterday, I get them confused now. The highest yield for a 10-year note going back to 2007. It's a fact. It's a fact. 30-year note, which I think was yesterday. They were in the last 2 days. Highest yields going back, we're approaching 2003. Because you got to remember we had that inverted yield curve nonsense, right? It's more economic nonsense. But I want you to know, for 4 straight days of losses in the UK, struggling to keep the deficit in check as borrowing costs surge. Sound familiar at all to anybody? Now, here's the difference, right? The UK is not the United States. Bloomberg. The worry is investors have just lost faith in the United Kingdom as a place to put their assets. What? And the worry is investors have lost faith in the UK bond market. Yields continuing to rise. Markets are nervous about the depth of liquidity in the UK markets. That's UBS. What do I keep talking about here? I keep talking about bid to cover here, tails, right? Think about this. Jason, it's worse in other countries. They're saying that this surge in yields still won't even help the pound. The pound keeps falling, even though the yields are skyrocketing in the UK. This isn't how markets are supposed to work. It's just a matter of time, Jason, before one of these markets breaks. Pure and simple.
So what is the behavior to try to slow it down or so-called stop it? I mean, because at some point if the bond market auctions slow down to a certain place, is it just the Fed just starts buying it?
Yeah, so right now that's what's happened in the UK. They had to intervene in their bond auctions. There was going to be a horrific disaster in that market yesterday. They had to step in and essentially buy the debt to keep the rates from really going haywire. And this is what's going to happen. I think we're going to see if we get out of 2025 without QE, it'll be a miracle. I'm just telling you, it will be a miracle. We are facing things that are unprecedented, and here's the sad part. I saw it this morning. I want to say it was yesterday. Elon Musk has now walked back the $2 trillion. Says can't do it. Can't do it. Hey, but we've got a new goal. How about maybe $1 trillion? And Jason, I'm sorry. I want it to be. That's not happening. It's not happening. You can't cut $1 trillion if you're not going to cut Medicare, Medicaid, defense, Social Security. And you can't do any. Interest on the debt is already going to add another $500 billion, and that's if the debt doesn't get out of control here, which I think it might.
You know, Trump almost a year ago said he was worried that his next term, when he wins, he'd be looking like Herbert Hoover. Yeah, he actually said that out loud. He's really worried if things don't go the way he wants it to go, that he's going to be the next Herbert Hoover, and he doesn't want that to happen. But I don't know, Joe. I mean, will we have a depression? Will we have a recession that is elongated and fierce?
It's going to come because, and again, it's not Donald Trump. I want to be clear on this. It's not him.
Hence the comment he made.
Right? He will do anything to avoid it. And that's kind of where the problem lies. Unfortunately, we actually needed some. Of course, we would never elect somebody to be, the next Herbert Hoover. You know what? We need somebody that's willing to say, yes, I'm going to crash the economy and kill inflation and get our spending back under control. Nobody's going to vote for that. 800-951-0592. These are just facts. Just facts. How come the debt exploded after 1971? Well, you know why. You know why. Hey, we don't have to give you gold anymore. Now you're just stuck with paper. That's all it is. It's just paper. What's behind it? Nothing. People, funny. Remember there's some societies that they traded shark teeth, right, as money. Right? People are like, oh, that's ridiculous. Is it? Is it? What's more ridiculous? Trading something that has absolutely no value and pretending that it does. And allowing for unlimited printing. That's what we have right now. It's all faith. And today, right on Bloomberg, people are out there saying, man, I don't know. There's not a lot of liquidity left in this market. Nobody seems to want to lend the UK any money. What? Have you seen how crappy our... You know what's so funny? A really good auction today. I mean, a really good one. We don't even have them. That would have been on the... I wouldn't say crappy, but right next to crappy 25 years ago. The average auction today would have been considered crappy 25 years. Terrible. Awful. Right? Well, we just moved the bar. You only can move it for so long. Right now, gold's up 5, 26.70, almost 6, 26.70. Silver's up 10 more cents today, $30.15. I got a great deal. Something we don't sell a lot of, but it came up, and I said, we got to take advantage of this. 10-ounce silver bars, $320. So not even $2 over spot. Not even. Right? You got silver, $30.15. You can own 10-ounce silver bars, $320 here, 800-951-0592. And I'll just tell you what China is doing in the silver markets, people are going to be very unprepared. My worry about people's lack of diversity right now, people's lack of, I don't know if if they're just not worried or they're just waiting, they're not convinced, right? That I think Joe's right. He probably is, but it's Donald Trump, so I'm going to wait. You can't. You can't. And see. It's going to cost. Hopefully, and again, like I said, if the UK bond market collapses, that's not Donald Trump's fault. Nothing he can do. Is he going to sit there and say, hey, let's have a recession, guys? Let's have the next Great Depression? No! He ain't going to do that. He's going to bring tariffs. He's going to bring tax cuts. He's going to bring some spending. We all get it. I'm going to tell you this. I have seen article after article after article after article about how much silver concentrate China's. It's crazy. They don't want it to get to the markets. Mexican silver miners, which, boy, it's getting expensive. Look at this. They're saying that their production costs, this is Mexico, has already soared to over $27 an ounce. Uh-oh. Do you know in Mexico, like when I started, Mexico, they're in the same mines. They were getting silver out of the ground for less than $1. Now it's over 27. And Mexico's one of the cheapest places in the world to get silver out of the ground.
Their mines are starting to run out, though, aren't they?
Yeah, well, and now the government trying to take over here. Listen, this is a bad situation. Jump on these silver bars, 10-ounce silver bars, $320 at 800-951-0592. Really quickly, by the way, it's been the holidays, all this stuff. I won't make a bunch of excuses. Things have been a little slow. Next week, we'll be all caught up. There's a few metals plants still hanging out. We're waiting on some product. It's all shipped. It'll be here in Phoenix tomorrow. It'll be up in Colorado in the middle of next week. If you've got an order that you've been waiting for, you're like, gosh, normally it doesn't take this long. It was the holidays and all this other mumbo-jumbo, and people were taking time off. But it will be all caught up before the end of next week. So I just want to throw that out there. I meant to mention that the other day, and I forgot. But 800-951-0592. Get that silver put away. And then, Jason, when we are talking about issues that we got to be ready for, there was really something interesting today. Hershey's, the company, the chocolate company. They have gone to the CFTC. That's the Commodities Futures Trading Commission. Okay. Now, Hershey's, they hedge chocolate. Sure they do. Here's a problem. There's not enough. Apparently, they've asked the CFTC for approval to purchase 90,000 metric tons of cocoa on the futures U.S. market. Here's the problem with that. Okay? That's 9 times more than the exchange allows. Like, no, you can't do that. Hershey's is like, no, listen, we're going to buy it. We're not trying to drive up prices. We're not trying to manipulate the market. But if we don't, we're worried that we won't have the chocolate when we need it. Oh, boy. By the way, chocolate, coffee, eggs, you think they're expensive now? Holy crap. Yeah. Please let us buy it before somebody else is allowed to buy it. We'll be back after It's official now. The 20-year note is now trading over 5%. So that's the first of the notes to hit the 5% level. As we talked about earlier today, the 30-year note is in the 4.9s, the 10-year note in the 4.7s, the 20-year note, which we reintroduced in 2020. Why? Because, well, we got to sell more debt. The first now to break 5%. I got news for you. You're not going to like it. They're all going to break 5%. But news out of Hershey's, this is staggering. How much is 90,000 metric tons? You know those 20-foot storage containers? That's 5,000 of them, right? 5,000 of them. And rumors are spreading that this is not a hedge, right? As an attempt to try to control costs, just the opposite. Hershey's is trying to cover everything that they need as prices are going to skyrocket. I think we're going to see this in a bunch of markets. This is, I've never seen it. I've never heard of it. You know, they have these rules in place to prevent companies and people from cornering the markets. This is significant, and especially they didn't say, "Hey, can we get 15,000 tons or 20?" No. We're only allowed 10,000. No, we want 90,000. I mean, this is scary things. This is, hey, the cocoa market is broken.
No, it's believe it or not, as I wanted to look up some facts. Hershey's is an interesting company historically, and chocolate was actually very important during World War II. Milton Hershey, the founder, got off the Titanic on the last stop before it sank. So did, of course, J.P. Morgan. You know, the Jesuit master of Captain Smith also. They got off the ship, right, before it crashed, right, and killed the three biggest opponents of the central banking cartel. But Joe, what's more interesting for what you're talking about with Hershey's, with chocolate, you know, of course, Hershey's must have been playing ball because by World War II, you know, a couple decades later, they were making ration bars. They made 24 million ration bars a week during World War II. It was actually part of what the soldiers carried on them for survival. But I guess they could have went with another company, but they, of course, they went with the guy that was on the ship with the central banker and the Jesuit leader there. But so Hershey's is having economic problems. My guess is hopefully the grandson or the grandson of somebody might be watching out and give him a bailout, maybe. You know, I mean, is that on the chart, or is Milton, he's dead and gone, and, you know, maybe we're seeing the end of this chocolate empire because
you know what,
they were chosen.
I feel like this is just me wondering, is Hershey making the play that they're going to be the last man standing because they have the money and they're going to essentially try to guarantee that, hey, they may be the only ones to have it. I mean, that's got, I don't know if they're listen. I don't know if they're going to allow it. I do know that Hershey's has petitioned to do this. And again, I'm just saying, things are not going to get cheaper. They're not going to get cheaper here. I don't know what the outcome is going to be. This is kind of exactly what China is doing to the gold and silver markets. Again, 10-ounce silver bars, $320 at 800-951-0592. And then something really interesting. You know, we've hit 5% on the 20-year. Yesterday, the Fed released its minutes from their last meeting. And it came out where everybody was all concerned, almost all participants judged the upside risk to the inflation outlook has increased, then why did you cut rates? Right? Wait a minute. Inflation's going to get worse, then don't cut rates. Oh, no, we got to cut rates. Here was the part that really kind of ticked me off. Now they're trying to blame Donald Trump for it. The guy's not even president yet. No. Of course, Jason, I told you inflation was coming back. It didn't matter. How many times did I say it didn't matter who won? And people got mad. Joe, stop saying that. Didn't matter. So now they're trying to say, well, these policies by Donald Trump are going to make it worse. And yet they said inflation is going to be much worse. But, oh, by the way, we cut rates anyway.
Well, and, maybe we'll have some time on the next hour, but I pulled the clip. Trump wishing that the market will crash in 2024. It's funny how you forget these things.
Well, he's smart, right? He doesn't want to be the guy.
Did you see the rate rising cycle kind of end, and then they're reducing rates right up into his him taking office? Almost like, look, we're going to hold this thing together just long enough for it to crash right on you. And Donald Trump used to be a Democrat. He registered in 2001, and then once the so-called out-of-nowhere presidency of Obama took place in 2008, 2009, Trump changed to a Republican in 2009 because, well, if he's going to be president, it's going to be 2 terms of Obama, and then it's going to be a Republican. So he didn't want to wait 16 years, Joe. He had to change up and get in there, but he knows what that means. He's a Republican now, and they're going to have to crash it on his watch at some point. And it looks like Trump term 2 is crash, baby, crash, instead of drill, baby, drill, maybe.
800-951-0592. Patriot Radio News Hour. Right, yes. Give me the candy bar. That's what I want. Yes.
That was the actual Hershey bar. He actually says it this one, the Hershey bar. He doesn't say candy bar. He must have got the sponsorship for that one video or something. But this was the Hershey bar or the 100-ounce silver bar.
Yeah, it wasn't like he was doing a 1-ounce silver bar. Right? What was it?
He did 10-ounce silver bars or the Hershey bar, and then this one was the 100-ounce. The 100-ounce, the 10-ounce bar or the chocolate bar, or this one was the 100-ounce bar or the Hershey bar. So I think Hershey must have jumped on that one.
Gotcha. Yes.
Got to get that sponsorship.
Give me you know what? Is a Hershey bar going to cost an ounce of silver in the future? I don't know. Maybe. But get it put away. Wake up. Wake up. Time to wake up. It's coming. Challenger Gray and Christmas says that according to the announced hirings and firings, okay, so hirings, and this is all they do. Challenger Gray and Christmas, they track all this stuff. They said that hiring announcements were the lowest since 2015, according to the data this morning. That's a sharp moderation in job growth, saying that companies only announced 769,953 hiring plans in 2024. By the way, hiring announcements dropped to 7,999 in December. Whoops. By the way, November, 11,600. So what Challenger Gray and Christmas is saying, hey, at the beginning of last year, there was a lot of hiring announcements. Now there's almost none. And by the way, it was a terrible year for hiring. On the other side of it, planned job cuts. 761,358. So, Jason, essentially 761 and 769. According to Challenger Gray and Christmas, there was only 8,000 more hiring announcements than firing announcements. in 2024. So, again, who knows? I don't know what the job market is. We'll get another government jobs report tomorrow. Remember, they want a really crappy number. I don't know that they're going to get it, but I know that's what they want.
I guess it makes some sense for 2024. I mean, they were bringing in a ton of immigrants, and they weren't coming here just to sit around. I mean, I know some of them probably were getting some free money and doing nothing, but they were going somewhere. They were working somewhere. Most of them, right, Joe? They were plugging some holes at some point, and now we're going to have probably less immigration coming in. We'll probably have Trump will throw some guys out, and well, you're not going to need as many of them if nobody's hiring.
Yeah, I know. And the markets were closed today. Yeah, why do we got, wow. I don't think 2020, we're not going to have any problems with stuff to talk about this year, baby. Get it locked in. 800-951-0592. Jason and I are coming back with the half-empty cup, and I think it's going to be